Hi everybody. The next problem we're going to do in chapter 10 is problem 10-2B, and we're going to do entries for payroll and payroll taxes. We have the following information about the payroll for the week ended December 30th was obtained from the records of same company. The tax rates they give us, so they show us the salaries, the Social Security, the Medicare, state unemployment. And then it says, assuming that the payroll for the last week of the year is to be paid on December 31st, journalize the entry on December 30th to record the payroll. And remember, you can follow along with this problem on Cengage under the ungraded Chapter 10 assignments, or you can look at the problem in the back of your chapter. So we're going to move right up here, and we're going to start with the first journal entry where we're dealing with sales, salaries, expense from the employee's perspective. So on 12/30, this is going to be a really long journal entry. So we're going to make 3 debits for the different kinds of salary expense. So we're going to do each of those separate. So we're going to have sales salaries expense. And that is $625,000. We're going to have warehouse salaries expense. For $240,000. And then the last debit is going to be the office salaries expense. For $320,000. So the total salary expense in these 3 different areas is going to come to $1,185,000. And then as we work through the rest of this journal entry, so the next thing that we're going to record as a credit is the employee income tax payable, which is given to us. And this is for the money that the employer takes out of the check that they remit to the IRS that you're dealing with when you do your tax returns. So we're going to have income tax payable, employee, want to make sure we have it right, employee income tax payable, so that's a liability account, of course. And they've given us this full amount, which is $232,260. So we've got that. That's the first one. The next thing that we need to calculate out is the Social Security income tax payable. So when you're doing the Social Security, that's going to equal the total amount of the salaries expense. So it's going to be $1,185,000, and the problem tells us that the tax rate here is 6%, so we're going to multiply that times 0.06, and that's going to give us amounts of $71,100. So we're going to make a debit to Social Security tax payable. And that comes to $71,100. And remember that the employer has to match this as well when we do the second journal entry. Then the next thing we have to calculate out is Medicare tax payable. And again, when we're looking at Medicare, that's another item that's matched by the employer. And we're looking at the full $1,185,000, and the rate for that is 0.015. And so that amount comes to $17,775. So we've got $17,775. And then we also have our group insurance. We have to do our U.S. savings bonds payable. And that they give us, that's taken right out for the employees, but they give us that in the problem. And that is $35,500. And then the last deduction that they take out is we have group insurance payable. And the problem tells us that that is $53,325. And so the last credit is going to be to salaries payable. And salaries payable is going to be the difference between the total salaries, the $1,185,000, and all the other deductions here. And that amount comes to $775,040. $775,040. So that's the first journal entry they ask us to do in 1A. So I'll put 1A here. For 1B, they say, assuming that the payroll for the last week of the year is paid on December 31st, journalize the entry to record the employer's payroll taxes on the payroll to be paid on December 31st. Of the total payroll for the last week of the year, $30,000 is subject to the unemployment compensation. So this is a good thing to remember. So when we do this, I always kind of like to leave the, let me count my lines here. I want to make sure I hit everything right for this journal entry. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. All right, so when we do this journal entry, what I like to do is I like to put the, so 1230, and this is 1B. I like to put the first part, which is the payroll tax expense. So I put that up there because I know everything has to, all my credits have to add up to this amount. So I usually put this one in first, but I do it with a blank. So Social Security and Medicare tax payable, the employer matches these. So we're going to have a debit to Social Security tax payable. We've already calculated that out to be the $71,100. Let me put my line there. $71,100. And we don't have to do anything else for Medicare tax payable either. We have Medicare tax payable. And that amount is the same. It's a match, remember, $17,775. And then we have to calculate out the state unemployment tax. So state unemployment. The problem tells us that only 30,000 of that is subject to tax of the total payroll. And that the payroll rate for that is 5.4%. So we're going to do times 0.054. That's going to equal $1,620. So that's going to be to state unemployment tax payable. And that is 1,620. And then we also have to do federal unemployment. That's also only subject to 30,000, and that tax rate is 1.5, so times 0, oh no, for 0.8%, so it's 0.008. And that total comes to $240. So that's going to go there for federal unemployment tax payable. And when we add all of these 4 items up, it gives us the total amount for our payroll tax expense for the debit, which is $90,735. So that's how we do 1 and 2 of this problem. All right, so now we're ready to go on to part 2A. And 2A says, assume that the payroll for the last week of the year is to be paid on January 4th instead of December 30th of the fiscal year. Journalize the entry on December 30th to record the payroll. This journal entry is going to be exactly the same. There's no changes. So I'm going to put 12/30, and I'm going to put same as in 1A. Okay, so nothing changes there on the employee's part. But then it says for 2B, assume that the payroll for the last week of the year is to be paid on January 4th of the following year. Journalize the entry on January 4th to record the employer's payroll taxes on the payroll to be paid on January 4th. Because it is a new fiscal year, all $1,185,000 in salaries is subject to unemployment compensation taxes. So here's where we'll actually see a difference. So we're going to start with 2B here. We're going to put 12/30. Again, I'm going to put my debit up here for payroll tax expense. The amount for Social Security tax payable won't change because we already took that off the entire amount. So that's still going to be $71,100, and our Medicare tax payable is also not going to change. So that's $17,775. So what is going to change is the state unemployment tax payable. And now what that's going to be is it's going to be $1,185,000. So let me put state unemployment. And we're going to multiply that times the 0.054, and then the amount for that is going to be $63,990. So that's what's going to go here, $63,990. And then the last item will be the federal unemployment tax payable. We're going to calculate that again. So federal U, we're going to use the gross amount, the full amount of the salaries, because it's the beginning of the year. We're going to multiply that by times 0.008. That's going to come to $9,480. So we've got $9,480. We add these 4 items up, and that's going to give us a total payroll tax expense of $162,345. All right, and that's how you complete the journal entries for payroll tax.